we're excited to take you on a tour into the fascinating worlds of finance and the mind. Today, with the assistance of renowned author Morgan Housel's knowledge, we delve deeply into the psychology of money. Money, the tales we tell ourselves, the emotions we experience, and the choices we make are all entwined with it. It's more than simply numbers and transactions. In this video, we'll discuss the stunning revelations from Morgan Housel's book, The Psychology of Money. It's a book that reveals the unseen factors that influence our financial lives and provides priceless advice for all of us. So join us as we uncover the psychology of money. Whether you're an experienced investor, a beginning saver, or simply curious about the enigmatic connection between money and the mind, get ready to learn more about how your thoughts, feelings, and actions affect your financial path. Let's start. Join our YouTube community today and embark on an incredible journey of knowledge, entertainment, and inspiration. Hit that subscribe button and turn on notifications so you never miss a moment of our exciting content. 1. The stories we tell ourselves about money. We'll go more deeply into the tales we tell ourselves about money in this section. Consider the most recent financial choice you made. Did you save, spend, or invest money? These decisions' justifications frequently have roots in personal experiences. You know, we all have financial narratives that have evolved throughout the course of our lives. As varied as the people themselves, these tales can be. Some of us learned how to be economical and save every penny, while others were motivated by the risk-taking of business people. These stories influence how we view money. The observations of Morgan Housel serve as a reminder that these stories can either serve as a source of strength or as a concealed trap. You're probably on a sound financial path if your money narrative encourages prudent saving and investing. However, it may be time to look at the underlying story you're telling yourself about money if it promotes careless spending or a fear of risk. The first step toward achieving financial clarity and making decisions that are in line with your true goals is understanding and reevaluating these narratives. So, as you proceed through the psychology of money, pay close attention to the stories you are carrying. The secret to your financial thinking lies with them. 2. The role of emotions in financial decision-making. In this section, we explore how strongly emotions affect the decisions we make regarding our finances. Imagine a period when your financial decisions were influenced by feelings of fear, greed, or even euphoria. We've all been in this situation before. Emotions, as Morgan Housel points out, are crucial to our financial path. They have the potential to either be our strongest allies or our worst enemies. For instance, fear can cause investors to sell their assets in a panic during market downturns, missing out on potential long-term rewards. Greed can cause excessive risk-taking and borrowing, which can lead to financial catastrophe. It is crucial to comprehend these emotional triggers and how they affect our decision-making. Instead of giving in to the emotional roller coaster, it enables us to take a step back, evaluate our options, and make logical decisions. Being human means that emotions will always be involved when making financial decisions. But by identifying their influence, we may create plans to lessen their harmful impacts. As we proceed through the psychology of money, keep in mind that accepting the importance of emotions is a big step toward developing more responsible and logical financial judgment. 3. The importance of long-term thinking. In this section, we place emphasis on the value of long-term thinking in the finance industry. Imagine a massive oak tree, which represents tenacity and strength. The path to financial stability and riches is frequently founded in long-term thinking, much like the growth of an oak tree. The wisdom of Morgan Housel serves as a timely reminder that individuals who look beyond the near term are the most effective savers and investors. They are aware of time's influence. Compound interest, which Albert Einstein dubbed the eighth wonder of the world, is proof of the importance of long-term planning. Those who patiently save and invest over time are rewarded. It's simple to get sucked into the short-term swings of the financial markets, but those that maintain their long-term objectives frequently succeed. Long-term thinking encompasses all facets of financial planning and goes beyond just financial investments. It promotes responsible spending, systematic saving, and a consistent dedication to your financial future. As you proceed through the psychology of money, keep in mind that neither Rome nor permanent prosperity were created overnight. Your best ally in the search of monetary stability and prosperity may be long-term thinking. 4. The impact of behavior on investment returns. We get into the crucial subject of how conduct might affect our investing outcomes in this section. We frequently hear about strategies, assets, and markets while discussing investment. But what many fail to recognize is the irrefutable impact our own actions have on the results we ultimately attain. We may learn from Morgan Housel's experience that human psychology can result in both smart investments and expensive mistakes. Overconfidence, loss aversion, and herd mentality are a few behavioral biases that can mislead investors. They may lead us to make the exact opposite decision of what a good investor should do, which is to buy high and sell low. The first step in avoiding these behavioral traps is to become aware of them. It's important to realize that the way our brains are built often prevents us from making logical financial decisions. In The Psychology of Money, Morgan Housel offers advice on how to deal with these psychological difficulties. He demonstrates how to exercise self-control, keep a long-term perspective, and abstain from rash decisions that could reduce investment returns. Keep in mind that even the best investing strategy can be destroyed by irrational behavior as you learn more about the complexities of financial psychology. Understanding and controlling your own psyche will open the door to more successful and lucrative investing. 5. The Power of Adaptability. This episode delves into the essential idea of adaptation and how it affects how our financial futures will be shaped. Our financial journey is not an exception to the unforeseen turns that life might take. According to Morgan Housel, flexibility is essential for surviving the personal financial world's constant change. Think of adaptation as the capacity to withstand adversity, change course when necessary, and maximize variable situations. It involves maintaining flexibility in the face of financial difficulties. Real-life accounts of people who had setbacks, job losses, or unforeseen bills abound. Their capacity for adaptability, inventive problem-solving, and perseverance is frequently what results in financial success. The financial industry is changing, therefore tactics that are successful now could not be in the future. Because it enables us to modify our behavior and plans in response to changing circumstances, adaptability shines in this situation. According to Morgan Housel's The Psychology of Money, adaptation might be the difference between financial security and hardship. It's a quality that can assist us in overcoming challenges and advancing toward financial security. Remember that adaptation is your ally as you proceed through the world of financial psychology. Your financial future can be shaped to be more robust and wealthy by accepting change and taking experience into account. Let's pause to consider the priceless lessons we've learned as we come to the end of Morgan Housel's The Psychology of Money adventure. We have looked at the financial stories we tell ourselves and how they affect the decisions we make. We have examined the significant impact of emotions on our financial choices. We have emphasized the importance of long-term planning and the role that time and compound interest play in accumulating wealth. We have looked at both the good and negative effects that human actions can have on investment returns. The power of adaptability, the capacity to welcome change and discover resilience in the face of financial challenges, has now been recognized. More than merely a book, The Psychology of Money is a guide to financial self-discovery. It serves as a reminder that our connection with money is extremely private and that it is capable of change with knowledge and self-awareness. Keep in mind that you have the resources to make wise financial decisions as you set out on your own adventure through the world of finance. Understanding your thoughts, feelings, and actions will help you to influence your financial future. The wisdom of Morgan Housel's book serves as a guide, illuminating the road to financial clarity and success, whether you're just beginning your financial journey or looking to improve your understanding. We hope that our investigation has motivated you to learn more about the psychology of money and to carry on your quest for financial knowledge. Thank you for joining us on this journey.